Hi, I am Brett Chappell, and welcome to Fixed Income Perspectives. And today we're going to be talking about the consolidated tape. And with me, I have an expert, Vidal Mehra from Propellant Digital. Welcome, Vidal.
Hi, Brett. Great to be here.
Listen, before we kick off, can you just explain a little bit what Propellant Digital is and your role there, please?
Sure. So I'm the Chief Product Officer here at Propellant Digital. We facilitate data feeds from the various regulatory sources around the world. The core focus for us is really the MiFID data. We've had connections to all the public sites that publish this MiFID data, and we allow clients to store, connect to, and use this data. More recently, and I know we're going to talk about this in a minute as well, we're able to facilitate a connection to the UK Consolidated tape.
That's perfect. Thank you. I think before we get into the consolidated tape, there's a confusion by some people. They say we have transparency. There's two. We've seen transparency both in the UK and obviously here in Europe. Can you just give us a brief top-down view of what that is all about? And then we can
Absolutely.
discuss the differences.
So, as you mentioned, you have two main regimes in Europe. You have the ESMA regime and you have the FCA regime. Within those, there's even more nuance as you have different rules for bonds, for ETFs, for OTC derivatives. So it can get very complicated. What these rules effectively do is they allow people to see the time taken to report a trade, i.e., how soon after a trade occurs will the general public be able to see that? It depends on the asset class, it depends on the size, and it can depend on, say, the time to maturity. There's a lot of different factors, and it can be quite complex to get your head around.
Thank you for that. I know, but it's a fascinating thing. And then the CTP is it the consolidated tape, and it started out in the UK. Can you explain what your perception is of that and how it's affecting the markets?
Absolutely. So it's very exciting. We've got the first consolidated tape here in the UK. Of course, in the US, you may have heard of FINRA's Trace, which has been around since the early 2000s, and European regulators have been looking to do something similar here. The FCA managed to get there first, and so this launched in June, and it now means that you can get the MiFID data for debt securities. We often refer to it as the bond tape, but we should be precise here because it is debt securities. It means people can now get this data in real time. And that's a huge move forward for people. I should stress quickly that there is a scope here. So some securities are out of scope, and this particularly affects structured or asset-backed securities.
I think that's a very valid point, and I think that people often say crap in, crap out. So even though there's data coming out, it has to be cleansed and has to be filtered. And that by itself is also a very big thing. We know that in Europe, you have the Savings Investment Union where they're trying to make it more democratic. What are some of the takeaways now after a couple months that in terms of data quality and how you guys are seeing changes in the market?
It's an interesting one. So, with regards to data quality, of course, because we have multiple regulators in this scenario, the FCA has the tape, ESMA will have their tape. You're naturally going to get a degree of duplication. Sometimes a participant will have to report to ESMA and to the FCA. That's unavoidable. And that's where third party providers like us come in and cleanse the data. There can be other reasons why there might be a duplicate. It can get a bit complicated, but there's always this need to actually cleanse data post-event. Now, in terms of trends, it's perhaps too early to sort of say with any kind of high degree of confidence, but we can say anecdotally at least that there is potentially a shift in the way traders are engaging. This really relates to the transparency changes that came about for the FCA in December and for ESMA in March this year. You have what's called deferral thresholds. So if you imagine perhaps in the past, if a buy side trader approached a market maker and the market maker didn't want to maybe do the full size, perhaps they do smaller size because it benefited them. Maybe they had small axe. Now, again, this is just anecdotal. it seems that when a buy side trader comes in with a size that is closer to a deferral threshold, it might be advantageous to actually upsize because then you don't have to report the trade quite as quickly. It gives you more time to exit the risk.
I can imagine that it does modify behavior on that front. And perhaps to wind up here a little bit, I know that you and your team do a tremendous amount of analysis, and we're starting to see things that, for example, people didn't realize that you can trade euro out of London or emerging markets denominated in dollars or treasuries. So, what are some of the interesting takeaways that you think people should know about the CTP and transparency that people should take away from here?
I think some of the most interesting things that you touched on there are around emerging market bonds in particular. It's not just hard currency bonds, but in local currencies as well. We're seeing an interesting amount of flow. As you mentioned, we do articles on this sort of thing, and we do cover Asia Pacific currencies, African credits, LATAM credit as well. But I think one that really stands out to me that I think would surprise people is that within the rules of MiFID reporting, and this it also comes via the UK consolidated tape, US Treasuries are reported in real time. And that includes the off the run activity. And that's a big difference to FINRA's approach because they publish an end of day file. And I think that, for me, is really the standout difference.
Perfect. Well, listen, do you have any concluding thoughts that you'd like to share with people before we head out?
I think this is actually the start of the journey, not the end. We've seen the first tape come in. There's going to be more tapes coming, probably early next year. It's going to be across multiple asset classes, not just bonds, but OTC derivatives, equities, and ETFs. I think the challenges that come with that around aggregating and cleansing the data, and that's where, of course, a third party validator such as ourselves comes into play. I think it's interesting. We're going to see the world change, and it's a really exciting journey.
And I agree with you on that front. Listen, Vidal, thank you so very much for taking part. And I would also like to thank Transfic for supporting this series. Thank you, Vidal. We look forward to following through with you.
Thank you very much.